Hello and welcome to this week's Forex Review and Outlook. I'm Selena Nicholas here at xm.com, and with me is our chief economist, Michalis Florentiadis. Michali, the Federal Reserve held a policy meeting this week. Yesterday they came out with their decision, no interest rate hike. What were the main reasons? What are their concerns?
It seems concerns were twofold. One was the global economic situation, the fact that starting from China, we are seeing some economies, especially China as mentioned, but other emerging economies as well, although their focus was on China, that are slowing down, and this could have repercussions on the US economy. And the second was some financial market turbulence. During August, we saw some nervousness, and also the fact that the dollar had strengthened, so let's say financial conditions were tightened a little bit, and inflation was also looking subdued. So these were the reasons more or less for the Fed to hold.
Indeed. Well, Fed hasn't raised interest rates since 2006. Do we see any rate hikes before the end of this year? What do you think?
I think their dovish tone suggests that it is becoming less likely of a prospect. They only have October and December if they want to raise this year. October is looking difficult. December, there may be some end-of-year liquidity issues. We're going to look at the data, of course, but this looks like a Fed that is very hesitant about pulling the interest rate trigger.
Okay, and so how would this affect markets in general, the rest of the world?
The effects, first of all, there was a direct hit on the US dollar, not only because they didn't hike, but also that their outlook was very dovish, as we said. So the chances, whereas markets before felt that if they hadn't hiked yesterday in September, they would have hiked in October or December. Now it's looking much less likely a possibility, a rate hike. So a lot of people had gone long the dollar, expecting the Fed to hike interest rates. Now that this is becoming more uncertain, a prospect, and maybe we will even enter a slowdown in the US. Who knows? I mean, with the global economic situation, then the dollar's allure or attractiveness is looking much reduced, much less.
Indeed, we saw a dollar sell-off immediately after the announcement.
Exactly. And also with the other markets, we saw stocks selling off a bit, and also bond yields falling. So lower bond yields are reflecting the lower interest rate outlook for the medium term.
And safe havens, gold benefited.
Exactly, and commodities also benefited a little, yes.
Indeed, well, we shall see what happens with the...
And of course, emerging market currencies and commodity currencies, the two areas that were very much under pressure recently, were allowed to breathe a little because of this situation.
Indeed. Okay, so basically the Fed is still very data dependent, looking especially at the labor market, inflation.
Well, what impressed most observers was that the Fed didn't pay so much attention to the situation in the United States, but they decided to put more emphasis on developments abroad and on financial markets. So this is quite original for the Fed. It used to stress that its policy was geared for the United States. And also the United States economy is traditionally thought of as a rather closed economy in the sense that the traded sector is a small percentage of the economy. So international considerations traditionally did not have the prominence that the Fed gave them yesterday. So this is something interesting.
With the world being so tightly linked right now, perhaps they do have to look abroad as well. Anyhow, well, that's how the Fed basically decided. Now let's just quickly look at what's coming up, an important event in Europe, basically Greece. on Sunday has elections again.
Yes, except for the Greek elections, of course, we'll see whether we are going to get any turmoil. I think the market has been rather complacent about developments in Greece lately, so it's not expecting any huge upsets there. A government to emerge that is more or less going to enforce the memorandum. And the other data that we have next week, not so important. We have, of course, some market PMI indices. We have Japanese inflation. We have durable goods from the United States, but definitely a chance for markets to digest what the Fed has done and the outlook for monetary policy going forward.
Okay, well, thank you very much, Michalis. Thank you, everyone, for watching. Have a great day.